Happy November 6. My name's Jessica Amir, market strategist here with Moomoo. It's great to have your company. What is happening in markets overnight that is making news that you need to be aware of? Well, investors are very selectively buying into the pullback overnight, and that's why we saw stocks move higher. Perhaps this is a theme of the year amid the long-term AI revolution. The Nasdaq 100 rose 0.7% with just 60 names moving higher. In the broader S&P 500, 60% of those companies managed to move up. Bitcoin, of note, managed to rise 3%. It's back above 100,000 US dollars. The biggest percentage gainer overnight, though, was a company called Solstice Advanced Materials. It managed to rise 11%. Now, the stock was only recently added to the New York Stock Exchange, and I suspect that it's probably rallying because Vanguard bought into the company. Now, this company is one that you might want to track. They sell refrigeration and various other types of materials, protective fibers, for two key hot sectors, semiconductors and healthcare companies. As for the local stock market today, that is expected to follow Wall Street higher. Tech and Bitcoin related stocks such as Block, names that you might want to keep an eye on, as well as gold names are expected to rally, and that's because the gold price appears to be perhaps back on the move up. As for what else you need to know, I suspect further pressure will come into oil companies today. That's because the oil price is now down 5.3% in the quarter, and 1.5% of that loss in oil came overnight. Also note the Aussie share market's key indicator, the benchmark ASX 200, that is also suggesting the market is losing steam. It's continuing to pare back from that October high. It's now down 3.4%. But the key focus for investors right now is considering buying quality and defensive names, because these are the stocks that tend to do better than the broad turbulent market when seas are rough. Why am I talking about this today? Well, the Nasdaq 100 and the S&P 500 last night, as an example, they could not hold on to gains that they made earlier in the day. Also consider, secondly, the technical indicators for the Nasdaq 100 are still flashing that a pullback could occur. Now, this reflects the cautious undertone that is around in markets at the moment. Now, this is even despite the data that came out overnight. US economic data basically came out saying, yeah, the economy is growing, which is great. We saw two indicators for that, showing the services sector is growing. In fact, services activity grew at its quickest pace in October, its quickest pace in 8 months, and also private payrolls, as in jobs, they rose as well. So it looks good, right? But what is ahead is US unemployment data out later this week, and inflation numbers in the US come out next week. So I guess for some, this is a worry because they could basically indicate that the US economy is A-OK and it doesn't need a rate cut. So for investors, what does this mean? Well, it means hot air is probably going to continue to come out of some of those more speculative names. Think about meme stocks, also smaller companies as well that typically carry higher debt. Because if we're not going to get a rate cut in December in the US, you need to think about these companies potentially being pressured down lower. And this is why specifically we're seeing investors rotate and move and bunker into those defensive sectors. They're the companies that have got high repeatable cash flows. Now, what's really telling, ladies and gentlemen, is that if we dive beneath the surface, look at the trading trends and flows into the US and Australia, we can actually see that this is playing out now. Investors are indeed becoming a lot more defensive, and this is something that you really seriously need to consider. In the US, investors are heavily rotating out of the tech sector. In fact, the tech sector is down the most this month. Month to date, it's down 2%. Names like SMCI, they're down 19%. Maybe this reflects that their clients, SMCI's clients, are not as sticky as some other chip names. Also, Palantir, a stock that is continuing to bleed, its stock is down 6%. No surprise, that's because Michael Burry, that big hedge fund manager, the man behind The Big Short. Michael Burry is continuing to say that Palantir is due for a pullback. We all need haircuts every now and then. We spoke about that yesterday. Meanwhile, investors are continuing to rotate into, as in they're continuing to buy, those defensive names, specifically healthcare companies. Healthcare is the best performing sector in the US so far this month. Names like Eli Lilly are up 7%. Another healthcare company called IDEX Laboratories, that's up about 14%. Now, in Australia, the question is, are we seeing these similar tunes being played out? And the answer is yes, to a certain extent. Money is coming out of growth areas in the Aussie share market that basically got us up to those record all-time highs. So think about the uranium names, the rare earth names. They're seeing heavy selling right now. So Palantir Energy, Deep Yellow, there's some stocks that are seeing heavy selling. Also think about Lynas Rare Earths. Their stock is down 12%. Meanwhile, investors, what are they buying? So they're coming out of the high growth names. What are they doing? Well, they're buying into some stocks that do well regardless of rate cuts in Australia. So we're seeing food companies continue to do well and be actively bought. Domino's Pizza, a great example. Their stock is up 4.5% this month, which is really interesting. I suspect that you or people at home listening to this podcast or watching this video might think that Domino's might do well over the Christmas period. Who knows? I don't know. Last time I saw a Domino's pizza on a Christmas table, but some people do. Also think about banks. Banks are doing really well right now. Now, banks, yes, they are classified as a growth stock and a growth sector, right? But think about the fact that they make money regardless of what is going to happen in the economy. That's the reality, but their margins are pretty slim, right? But the reason I'm pointing this out is because I have to say it, the facts are that Aussies are actually buying bank stocks so far this month. So that leads me to the stocks to add to your watch list right now. So 3 for you. Let's kick off with McDonald's. Their shares rallied 3% after they delivered better than expected quarterly results. Their sales in the quarter rose 2.4%. Across the year, not much. I guess adding up all the Big Macs that are sold, rounding it all out, their sales across the year, would you believe, only managed to rise 0.3%. What's really interesting, though, is ask yourself, how many new McDonald's stores have you seen opening up? Well, think about this. There's going to be a lot more McDonald's stores around the world. McDonald's plans to open 1,800 new restaurants across the world. And what does their growth look like in the year ahead? Well, they're expecting low sales, just a fraction above 2%, and that's because McDonald's has said that they're seeing low-income customers not spending as much at Macca's. That's interesting, right? Consensus says McDonald's is a stock that could be a hold for the year. McDonald's shares, wait for it, McDonald's shares have gone up by 10,849% over the last 40 years, giving away my age here. That's how old I am. So McDonald's shares have gone up almost 11,000%. On an annualized basis, that's 12% per year. So that's something for you to think about. Snap shares have gone up by 16% in after-hours trade on delivering better than expected results. What's happening? A couple of things. Firstly, Perplexity AI, they basically said, hey, we're going to pay Snap $400 million over the next 1 year to really integrate AI and their search functionality into Snap. So that's a good news story for Snap. Secondly, also consider that Snap's announced that they're going to buy back lots of stock. How much? 500 million worth. Usually stock buybacks add value to a company's shares, but Snap shares have been so choppy. They look like a bit of a mousetrap, but that's something for you to consider. Thirdly, do note that global active daily users, who on earth is using Snap? Well, it's the younger generation. Global active daily users rose considerably, in fact, more than expected. Consensus says that Snap is a hold over the 12-month period, but overnight, really interesting to see that there was one bold analyst saying that Snap is a buy, and that was BMO. Last but not least, National Australia Bank, one of the big four banks, has reported results this morning, and they've delivered 12-month results. All in all, what do you need to know? Well, their profits, they are not as good as Wall Street or as analysts were expecting. Now, what do you need to know? A couple things. Their net profit, the amount of profit after they pay tax, etc., that hit $6.76 billion. It sounds like a lot. Now, because they made so much profit, they're going to pay a dividend, an 85-cent dividend. That's exactly the same as it was a year ago. So no growth in their dividend if you are a shareholder. Their net interest margin, this is something that we as analysts watch closely, and you should probably pay attention to, because their net interest margin, meaning the amount of money that they're actually making, only hit 1.7%. That's pretty skinny. So 1.7% profit margin. And those margins have been coming down over the past 10 years. That's something for you to think about. What is happening that's a bit of a concern for NAB is their credit impairment charges jumped up 14% to $833 million. Now, what is a credit impairment? They're basically a write-down saying, hey, Aussies are doing it tough. They're missing debt repayments. They can't pay their debt payments, so we're going to take a loss on the chin. Now, this basically reflects that Aussies are fatigued. They're struggling to miss their debt repayments. And I think banks, big four banks, including NAB, wouldn't mind if the Reserve Bank of Australia cut interest rates, but I don't think that is happening anytime soon. Consensus says NAB is a hold.